Good morning, and welcome to yet another edition of Macro Now, set to be released every Monday morning. Today is Monday, November 30th, 2020. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we're going to be contextualizing the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. You have the US dollar continuing to be devalued yet another minus 0.7% last week, taking its 6-month drawdown since signaling bearish trend on a 90-day basis to minus 7.3%. You have the euro versus the US dollar up another 0.9% last week and continues to signal bullish on both a 15-day as well as on the 90-day trend duration. You have the Japanese yen versus the US dollar down minus 0.2% last week and remains bullish on both a 15-day as well as on a 90-day trend duration. And you have the British pound versus the US dollar appreciate 0.3% last week and is up now 2.0% in the last month alone and continues to signal bullish trend. In terms of this down dollar, you want to take a look at inflation accelerating in terms of dollars. You take a look at something like the CRB index, the commodity index, inflated 3.1% last week, taking its inflation to now 6.8% in the last month alone. That comes on the back of the oil continuing to reinflate another 7.3% last week, taking its 1-month inflation to 14.2%. You have copper inflating another 3.2% last week, taking its 1-month inflation to 10.3%. And you take a look at something like coffee, that inflated 5.2% last week, taking its 1-month inflation to 13.4%. So what you're seeing here is copper and coffee, they have casual and correlating impact on future inflation expectations and real interest rates. Otherwise, if they did, you wouldn't see the precious metals continue to lose value here. You have gold now down minus 4.4% last week, taking its 1-month decline to minus 6.3%. And silver lost minus 7.6% of its value last week, taking its 1-month decline to 8.4%. When you take a look at some of the interconnectedness of these macro market signals, what's becoming more apparent and suggesting that the cycle lows may be in for global bond yields as much as the cycle lows for both US and global deflation as you make this effectively globally synchronized recovery in terms of rate of change, in terms of growth accelerating. Not only do you have the US stock market now minting all-time daily highs on this down dollar and prospect of an acceleration in growth and inflation, where you have the NASDAQ now up 3.0% last week and up through 6.8% in the last month. But you take a look at something like Japanese stocks, those were up 4.4% last week and are now up 13.5% in the last month alone, continuing to signal bullish trend. And then taking a look at something like the Russian stock market, that was up 3.1% last week and is up 15.1%, in the last month alone, also signaling bullish trend on a 90-day basis. And that's of course on the back of this down dollar and oil inflation. So just as a side note here, as you take a look at the US dollar, it's finally started to signal immediate term oversold here from current levels early this morning. And if you take a look at some of these big long inflation holdings like oil, copper, and energy stocks, those are signaling immediate term overbought within their bullish trend. So if you take a look at this strong inverse correlation that the US dollar has with this something like the CRB index of minus 0.88 and minus 0.87 on a 15-day and a 30-day respectively, as well as on the SPYs of minus 0.71 and minus 0.87 on a 15 and 30-day, again, then if the dollar does continue higher from current prices, you can expect a correction in commodities and equities tied to commodities. So that may be just the opportunity that we're looking for here to quote unquote buy the dip again as we make that turn into Q1. So with that, that's all we have for you today. If you have any further questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.